Hello students, welcome to your favorite class of accountancy. Today class is basically for F.Y.J C and other students also can attend, or other the office class person also can attend who want to learn about the accountancy. Today is the chapter 1. The subject is basic accounting terminology. In that subject there is a transaction. There is only basically two types of transaction. One is monetary transaction and another is non-monetary transaction. So what is called the monetary transaction? Monetary means related to the money. Whatever the transaction is taken place with monetary value, with cash or credit, that is called the monetary transaction. And other is non-monetary transaction. What is non-monetary transaction? Is that where there is no cash or credit is involved. There is only exchange of goods, exchange of one material from another material. That is called the non-monetary transaction. So students understand well about monetary transaction. Monetary transaction, there is two type of transaction: cash transaction and credit transaction. What is cash transaction? So cash transaction is related with cash purchase, cash sales, revenue expenses, payment of salaries, anything you expense in form of cash, that is called a monetary transaction. And what is credit transaction? Credit transaction is also monetary transaction, but it is deferred cash transaction. Means you would pay the cash or payment, but after some time, means 1 month, 2 month, 3 month, there is a credit, that is called the credit transaction. Suppose you buy books of ₹1000 in cash, that is called the cash transaction. And if the same thing you buy, you will the books of ₹1000 on the basis of credit, you means you will pay the amount later on, that is called the credit transaction. So understand the nature of transaction. And in case of non-monetary transaction, no material will be involved, no goods, no exchange will be involved. And now we will learn about another question comes. There are basic, once you understand this terminology, and later on we can go ahead under this chapter. I'll tell you another what are the types of accounting. So after understanding the terminology, now you go ahead and understand the types of account. First is cash basis accounting. Second means accrual and mercantile basis. Accrual or mercantile basis. Third one is mixed. Mixed basis. So as per the chapter, what is a cash basis? As per the definition, the cash basis of accounting and actual receipt and actual cash payment are recorded as per the basis revenue of recognized, which cash is received and expenses are recognized with the cash paid. So as per the chapter, it is clearly mentioned that if transaction is related with the cash or cash payment, cash means bank payment, today transaction is Google Pay, whatever, that is called the cash transaction. And another is mercantile basis. What is mercantile basis? Under accrual basis of accounting, the revenue, whether received or not, but has been earned accrual during the accounting period. Expenses incurred, whether paid or not, recorded word. Revenue is recognized when it is earned, accrued, and expenses are recognized when there are incurred. Any income earned, whether received or not, in expenses incurred, paid or not. So mercantile basis means if any income may be received in the coming year, but that is booked, so that is called the mercantile expenses. Suppose salary payable, for example, today worker come in factory and work for 1 month, but his salary will be paid after 2 months. So if this kind of transaction is there, then the entry will be passed in the book, but payment is not given. Payment will be given after 2 months. So this is called the mercantile transaction. And another is mixed basis. Mixed means both cash are also there, mercantile is also there. So that is called the mixed accounting. So hope you will understand, and if any query you can ask me.